It's Tuesday, February 18th, and this is your Stock Market Daily News Podcast, your essential morning briefing for traders, investors, and all who follow financial markets. Yesterday's market session saw the major averages edge lower after last week's rally lost a bit of momentum. The S&P 500 slipped just under 0.5%, the Dow Jones finished down 0.33%, and the tech-heavy Nasdaq shed about 1% as investors rotated out of high flyers. Today, we'll break down Google powering higher even after major antitrust legal troubles, sharp moves in crypto, a resurgence in hedge fund of funds, action in Asian markets, and updates from India's fund giants. Stick with us for what you need to know to get ahead in today's markets. Let's get right to the biggest story. Google's parent Alphabet just closed out a year of jaw-dropping gains, 65% higher in 2025, even though courts ruled the company maintained illegal monopolies in both search and digital advertising. Investors feared a forced breakup, but the court held back, ordering new behavioral rules instead of splitting up businesses like Chrome or Android. This softer landing soothed Wall Street nerves. The key takeaway? Even with regulatory storm clouds, investors are betting that Google's dominance, plus the accelerating AI narrative, will keep driving strong profits and holding market share. Turning to crypto and tech. Bitcoin tumbled to around $68,000, losing 1.2% overnight, while the Nasdaq and gold also retreated. The drop in crypto tracked a risk-off move tied to tech stocks as worries over AI-driven disruption ripple through markets. Notably, Bitcoin's correlation with the Nasdaq index turned sharply positive, showing they're moving together in this environment. Altcoins got hit harder, with names like Doge and Pepe down as much as 4%. For investors, these moves signal that macro sentiment and tech stock volatility are now closely tied to crypto's direction. In hedge fund news, it's a comeback story. For the first time since the 2008 crisis, so-called funds of hedge funds, which pool money into multiple hedge strategies, now control more assets than ever, topping $800 billion. Average returns hit more than 10% last year, their best results since 2009. And while the number of players shrank dramatically after the financial crisis, institutional investors are quietly pushing fresh capital into multi-strategy funds, seeking returns and diversification as public markets churn. Looking to global markets, Asian stocks eked out small gains in thin holiday trading while oil prices ticked up on geopolitical worries. Investors in the region are turning cautious, keeping an eye on upcoming U.S. economic data and the Federal Reserve's next moves. Notably, Treasury yields held near recent lows as hopes for rate cuts persisted following Friday's benign CPI inflation report. For global portfolios, the focus remains on central bank path and AI sector sentiment. Rounding out with activity in India's funds, the Sunil Singhania-backed Abacus FlexiCap Fund aggressively raised stakes in companies like Urban Company, SBI, Tata Steel, and 30 more stocks in January, signaling confidence in a broad set of sectors. The fund is increasingly tilting toward mid and small caps, aiming to combine stability from large caps with the return potential of emerging leaders. Indian investors, take note, domestic funds are getting both defensive and opportunistic as market breadth widens. Let's wrap up today's numbers. The S&P 500 closed at 4,910, the Dow Jones at 38,500, and the Nasdaq at 15,200. Key themes. Big tech's legal headwinds may be gentler than feared. Crypto volatility is tightly linked to risk sentiment in tech, plus hedge funds and global diversification are back in focus. This week, watch for Fed commentary, ADP jobs data, and crucial earnings in both the ad tech and consumer sectors. Don't forget to subscribe for daily briefings and visit our website for more in-depth analysis. Catch you tomorrow for the latest developments shaping tomorrow's markets.